Welcome. We are Worldwide Forex Trading, a team specialized in investments in the foreign exchange market and beyond. We created this YouTube channel with the aim of providing free information to anyone who wants to learn the forex market without paying for expensive courses from the so famous Instagram traders. In today's video, we will talk about a topic that has been extensively explored in theory by many other YouTube channels, but that is not used in the best way in practice. As such, we will teach to you how to identify and use a trend, using simple and real examples of market conditions. We will also teach you 2 different ways to identify a trade, so that this video helps both advanced and beginner traders. For those who don't know, a trend is the overall direction of a market or an asset's price. Many traders choose to trade in the same direction of the trend, attempting to profit from a continuation of that trend. Although there are also traders who prefer to trade against the trade, we think the best idea is to always go with the wave. There are 2 types of trend, the uptrend and the downtrend. An uptrend is marked by an overall increase of the price. As nothing moves straight up for long, there will always be oscillations, but the overall direction needs to be higher in order to be considered an uptrend. A downtrend is basically the reverse, being marked by an overall decrease of the price. So, how can we identify a trend? There are 2 ways, as we mentioned before. The first is by using price action, where the goal is to identify higher swing highs and higher swing lows for an uptrend, or lower swing lows and lower swing highs for a downtrend, as you can see through our examples. You can also use trend lines to connect these points. The other way is by using an indicator. There are several trend indicators that you can use, but we advise, especially for beginners, the use of exponential moving averages, usually called EMAs. In order to know the major trend in the market, you should go for a long-term exponential moving average, preferably above the 150 exponential moving average. The method of using this indicator is quite simple. When the price is above the line, we can verify that we are facing an uptrend. When the price is below it, we can see that we are facing a downtrend. Just that. We also advise you to have 2 time frames with the same trend direction. That is, if your strategy performs the entry points in the 30 minutes time frame, you should always check if the trend direction of that time frame is the same in the 1 hour or 4 hours time frame. You should perform the entry only if the trends are the same on both time frames. This example is applicable for all other time frames. The important thing is that you always have a bigger time frame to check if the trend direction is the same of your entry time frame. According to our experience, and also with other professional traders, if you execute your trades always in the same direction of the trend, the probability of success of your strategy increases dramatically. In some of our future strategy videos, we will start to implement an exponential moving average to know the direction of trends, so that you have more examples of how to use it in the best way. Thank you for watching, we hope we helped you. We also have a page on Instagram where we make some posts about technical aspects of trading and investments, as well as updated news about the global economy. You can also check our group on the Telegram, where we post some promising trading setups and provide fundamental analysis every morning. And the best part, this group is also completely free. We will leave both links in the description. Don't forget to hit the like button and to subscribe our channel. Turn on your notifications bell so you don't lose any of our educational videos. Goodbye, and see you in the next video.